What's up, guys? Sterling the Investor here, and in today's video, I'm going to talk about a common reversal pattern within pretty much any market. I'll be speaking specifically to the forex market this morning, and the pattern that I want to go over is the head and shoulders pattern, and basically it's a pattern that represents a reversal in a trend. So as you can see on any illustration that you can find on Google or just anywhere on the internet. It'll look perfect like this. You'll have an uptrend, and then you'll see the market do, the higher high, higher low, and then it'll pull up, and then it'll complete the first shoulder, then it'll make a higher high, but then it'll start to fall. It'll break that zone of structure, and then you'll see the right shoulder form. You'll see a higher low, and then once price breaks what they call a neckline, which is basically a zone of structure. And that first pullback is when people typically confirm that, the trend has reversed, and they'll be looking to enter at that point. So this is what it looks like, in a perfect scenario. So let's hop into the real charts. So in a real chart, it looks more like this. So it's a little bit more difficult to identify, but I'll go ahead and break it out here for you guys. So here would be the neckline. And, as you can see, prices, making the higher lows, higher highs. And then here's the head, there's the first shoulder, here's the head, and then here's the second shoulder. You see price made the lower high and was making lower lows, lower highs. Then it broke the neckline, came back up, made a higher low, and price continued to go down. So that's what it looks like in a more real life scenario. Here's the diagram, just so you can kind of get the comparison. And here's what it looks like more so in real life. So I'll just draw it out for you guys. So as you can see, as I add the lines into the chart, it looks more like the diagram that I spoke about before. However, it's not perfect, and you'll rarely see it show up in the market perfect. That's why you have to, spend your time, do your diligence, back testing, and get familiar with identifying these patterns, because they won't show up perfect like the illustrations that you study, but you can clearly see the similarities. So your entry point would be, if you were looking, would be around here. Anywhere in this zone would be your first entry point. Looking for the price reversal. Me personally, I wait for price to break the 500 moving average, and I'll probably be looking for a little additional confirmation to get in right there. But that's basically how it works. If you guys have any questions, leave them in the comments below. I'll be sure to answer them, and I'll catch you guys in the next video.